Hi everyone, welcome back. I'm going to be doing this midweek market focus. This is Julio Pinheiro here. Today is the 27th of August 2014. I've been asked by a few clients of mine to cover the RSI and the stochastic indicators. Then I'm gonna be scanning through. I'm gonna also go through some particular charts like the Aussie Kiwi and the CAD Swiss, um, which I usually cover them, and they're both on the way up. Um, then I'm gonna be scanning through the market here and there, and then let's see what's happening. All right, so let's get started. So what I've got here is the Euro-Japanese yen. I'm gonna go back to this trade here, which was giving lower highs and lower lows. And when you look at the last two swing lows, this one and that one, all you have to do is to connect them with a pencil, like that. And then you do exactly the same thing here. You connect the last two swing lows here. Okay, so this is pushing down. This one is also pushing down, so it's giving convergence. Yeah, it's giving RSI convergence. The settings for the RSI is RSI 6 70 30 here. RSI 6 70 30. You can change the colors, pick the colors you like. Okay, make sure you select the second thickness and then save it. There we go. So this is giving convergence, which means when it pulls back up, it's likely to carry on going down. Okay. Now here, for example, it was giving divergence. Yeah, these two swing lows, these two swing lows here. This is pushing down and that is pushing up, and then it just loses the momentum, goes up a little bit. See that? Basically, it does retrace, then it goes back down, it fails to take this low out, then it pushes back up a little bit. So basically, it does kind of pushes back up towards the EMAs. Yep. And then on the next one, it gives some convergence in the direction of the trend, so they're both pushing down nicely. So you'll be expecting a move like that to the downside, yeah? Now here is giving divergence. He's pushing down, and this one is pushing up. That is why it stays. It goes all the way up. See that? So this divergence is for this section here. Okay. Then here it failed to take out this high. It's still giving lower highs and lower lows. Just about. So it's still lower highs and lower lows. And then from there it pushes down again. Yeah. So the whole pattern is a bit messy now. It's not that clear. In fact, it broke through the trend that we have here as well. It broke through this trend here, so it becomes a bit unclear now. Okay, you have to look for clarity when you're trading. If we go into the stock market, it's been flying like mad. It's giving historical highs still, because all the professional traders, they're all trading off the weekly chart. The picture doesn't look that clear on the daily chart. When you go into the weekly chart, it looks much more clear, and it's just bouncing off the 20 moving average there. So it pretty much gives it's all as a low test bar and another low test of the 20 moving average. If you put these two bars together, it's a low test of the 20 moving average. That's another low test of the 20 moving average, and so on. And when you put the trend line up, it just fits nicely there. Now, when you go into the daily, the picture is not that clear because traders are trading on the weekly chart. Yeah, it wasn't that clear on the on the daily chart. The entry for the weekly would have been like somewhere here, because if you put this whole section together, then that's the lowest bar we can see on the weekly chart. So the entry would have been here and a stop loss down there, and you just let it run. Yep. I didn't quite like it on the daily because it broke through all these lows here. It's actually taken from the weekly chart, yeah. So let's go into Dow Jones. Very similar pattern, not as clear. If you go into the weekly, the pattern is very, very similar. Yep. That was the low test bar there, and it's pushing up back in phase one again. Now, the ones that I wanted to cover are the CADCHF, which I've been covering for a very, very long time, since this trend was broken. So this is the trend here, that it has been broken clearly, and since then it's been pushing up. Yep, that was a trend. Seems to be that it's forming a new trend. So it's still. Yeah. Now this becomes invalid. This one you can delete it as well, and just stick to the current one. Yeah. Okay. So now if this high takes out the previous swing high and it puts a new high and it pulls back, it's gonna start giving buying opportunities there again. Okay. Here he gave quite a few buying opportunities. Yep, to the upside. Now if it puts a new high, you're gonna have higher highs and hopefully higher lows. Then you can buy off the moving averages there, of the 50, yep, or even the 100 EMA, which is this one here in the middle. Okay, so that's the CADCHF. Let's move on. If you go into the Aussie Kiwi, this one comes from the monthly chart. That's the level of support down here at the bottom. Now it's pushing up quite aggressively there. Okay, it's 3,000 pips from level to level. And if you go into the daily, so you go comma D, enter, it's now giving higher highs, as you can see. Then when it pulls back down, you'll be looking for buying opportunities. Yeah. So this is giving high highs and high lows. You can ignore this section here. Therefore, now the level becomes a bit weaker because it's been broken. Yeah. So it becomes now a bit of a soft level there. So this is the actual pattern here that you get. Yeah. So that's higher highs. Okay, so there, higher highs, higher lows. You can look for buying opportunities to the 50. So yeah, then you can also put some horizontal lines as well. So it'll be a bit like that. Okay, so it'll be higher highs, higher lows, pulls back, the level of resistance becoming support. So resistance, breaking through, becoming support. So this can happen here. Yep, but overall we're looking at a move to the upside It's a very long-term move there that we're looking for. Yeah, it's more of an investment than a trade, as I usually say, because that's what we are. We are right at the bottom still, so it has got a lot of room to go north still. Yeah, like 2,500 pips. So it's quite a long way to go still. Okay, now let's see what else. Now, something that I'm looking at. Sorry, just go back. I'd like to see whether it's giving some convergence divergence. Okay, right. For this to give convergence, this will have to go up to there, so that you get high highs here on the cat Swiss, and this will have to go up to there as well. So then you get the high highs there. So it'd be on a trend continuation long. Now on the Aussie Kiwi, is giving divergence as it is now. Yeah. If it carries on pushing up, then it's gonna be giving convergence. Yeah. Now, if you go into the Swiss franc, something that I'm looking at up here, and put some levels up. There we go. So that is a level. Sorry, just make it accurate. So that's a level of resistance at the top, another level of resistance, level of support, level of support. Now, if you make it really, really thick, you'll see that there's a bit of a rejection zone happening there. Yeah, that's what we are now. There's a bit of a rejection zone happening here. So that is hitting the level of resistance there. And it's giving divergence here. And that is a level of resistance, support, support. Yep. And that's it, I think. A bit further back. Nothing there. Right. So let's have a look in here. So this is giving RSI divergence. Let's have a look at the stochastics. Stochastic is also giving divergence. As you can see here, this is pushing down. So it is clearly overbought both of them. Okay, and so basically it means that I have far too many buyers in the market. Now we need some sellers, so it is likely to reverse from there. Now when you do the put the lines on it and analyze it nicely, so we'll go here. Now we can bring this down like that. Now you can look for some Fibonacci levels and see which doesn't match up. So you go from the previous swing high to the previous swing low. Actually, it does match up, yeah. That'll be another one. 1.618, yeah. 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 So it's from the previous swing high to the previous swing low. It gives a 1.618. Sorry, just delete this line. There you go, that's better. So yeah, from the previous swing high to the previous swing low, is bouncing and sitting on the 1.618 Fibonacci extension level before it potentially reverses, and it's overlapping with a huge level of resistance as well, and it's giving divergence there. Okay, the reward risk ratio is not bad at all. because that's a 50 MA there, so it's quite far from the 50. So it's like if you stretch an elastic band, the more you stretch it, the more it's going to pin back. The difference here is 140 something pips, and the difference in here is 140 something pips. Yeah, so the length is pretty much the same thing. 147 pips, and voila, exactly the same. Maybe 1 pip lower. So look, yeah, pretty much identical actually. Wow, that's impressive, isn't it? So yeah, so the cycles are following a pattern as well in terms of length. So it overstretches, pins back, it's overstretched, and also not only that, but it's also giving you the divergence using the stochastic and the RSI. It's giving you a Fibonacci extension 1.618, and you get a huge horizontal level of resistance and support several times. And that's it really. So you'll be expecting the phase 2 to pull back down towards the moving averages. Okay, that's why it's called an average, because it goes back down to the average. So it'll be the phase 2 pushing down. Okay, cool. Let's move on. So just to finish off, it'll be, if the bar closes like that, it'll be an entry and a stop loss there. If it doesn't trigger, just let it run to the upside, not a problem. Yeah. If it stays like that and is not much bigger than that, you can put an entry just below the low of the bar and the stop loss just above the high of the bar, and then bring it back down towards the moving averages. Yeah. Okay. So this is a trend reversal. This is not for everyone. It is only for market traders that are trading also phase 2s against the trend. Okay. Let's see what else is out there. Right, I'm gonna have a quick look at stocks. Well, let's see what the FTSE is doing. It's pushing up, but it's not giving you highs just yet. It's close though, but it's not giving his new highs just yet. Right, it's kind of messy and it's kind of flattish there as well. Right, let's go into the stocks page. There it is. Right. So this up for buying opportunities. It's kind of flattish there. Next one. It's not giving you highs, nothing there. And the short ones. There it goes. Big face one, big pullback. This one got triggered in yesterday. This bar here. Yep. It's having a huge sell-off. So basically just wanna carry on going down with it. Yep. As we usually say, the trend is your friend until it bends in the end. So just stick to the trend. When it pulls back, look for selling opportunities and bring it back down again. Okay, next one. Rexam, this is trading on general industrials. That's the sector, which you can find it here. This one here. So it's kind of bearish. It was going up for a very long time, and now it's giving lower highs and lower lows. We're looking at the cycles, okay? Not looking at the individual bars. Looking at the big cycles. Yeah. Now, this is giving lower highs and lower lows as well. Very similar to the sector itself. It was pushing up, then here is kind of flattish, and now it's pushing down, giving lower highs and lower lows. It's bouncing off the 20 moving average there quite nicely. So here we go, that's how it is. phase 1, phase 2, and again phase 1 and a phase 2, and again phase 1 and a phase 2, and again phase 1 and a phase 2, and again phase 1 and phase 2. So that's your pattern. Whether it continues or not, you don't know, and you don't have to know neither. If it does continue, then it's gonna follow this trend that we have here. So let's just get rid of all this, yeah, so we can see what's happening. There we go. So that is giving a selling opportunity today. That's why it comes as a trend alert up here. And it also tells you the parameters. It also tells you the entry and the stop loss. Very rarely break through the 20 moving average. It's now sitting on it. The market is gonna close in just under an hour. So that'll be your entry and your stop loss. And the target can be somewhere down here. Okay, so this is a selling opportunity. It's happening live. Let's move on to the next one. Okay, had a huge sell-off, came back up, made a new low just about, then came back up and is now giving a high test bar, bouncing off the 20 moving average. Is not that clear. Next one. There is RSA Insurance Group, which is obviously in non-life insurance, and that's a sector is coming up under. The cyclicity is alright, not the best cyclicity ever. Bit of a trend happening in here. We do have the 3 touches. That's the pattern. It's a bit of a funny sub-cycle in here. Now, if it's unclear, leave it alone. Yeah, that's what we usually say. If it's not clear, if in doubt, leave it alone. So it has to be clear. Okay, this is not very clear, so we're gonna leave it alone. Okay. Even though it's giving a high test bar bouncing off the 50, and there's a trend line there, but this bit of a funny sub-cycle here, giving new highs there by looking at this funny sub-cycle there, and it's just not clear. Okay, so which is fair enough. So we're gonna just move on to the next one. It's kind of happening here as well. Here's Thomas Cook. So they almost went bust. Yeah, there is Thomas Cook, and that is 0. So they can't physically go any lower than 0. So that is 0 down there. And I think they actually went fast, and then they reopened their stores and so on. Not quite sure. I think they're based in Manchester, I think it was. So anyway, they almost went fast, or they went fast. Either way, it doesn't matter because we just trading the pattern. Then it shoots up to this section here. Then it was kind of stagnating. It wasn't giving new highs. It wasn't giving fresh highs at all. And then since then it's just been pushing down there. And then made a new low down here. Came back up, and that's where we are now. It's unclear. It's not giving low highs and low lows. So we're just gonna leave it alone. Let's see what else. Let's see what else. And see what else we have. Let's have a look. Well, he's giving new highs here. Pushing it up, giving new highs. It's coming back down towards the well, you have to come back down towards the EMAs there. the picture is not clear. Okay, you can force it, but it's just not clear. So I'm gonna move on to something else. Yeah, the things are as we know, the FTSE is not giving high highs and high lows. It was just kind of ranging, so the strategies, they just don't work when the market is ranging. It only works when it's pushing up or pushing down. Okay, so there won't be much out there. It'll be kind of messy. Okay, so most of it will be kind of messy. The one that is much better is the US stock market, which is giving fresh highs. This looks alright actually. There'll be just a few random charts here and there, given the right cyclicity. This will have to push up and give a new high, then pull back down, and then you'll be looking for buying opportunities of the EMAs there again. Okay. So this is the step-by-step process when you scanning through the market, looking for opportunities. You need to draw some lines, support, resistance, channels. Okay. So that's what you have to do. I'm gonna leave it here for now, and I wish you all happy trading, and I speak to you all soon. Cheers there, and bye now.